Yeah, I'd say fortunately, the times that I've seen somebody with a variable annuity, they may have bought it when they've still got 20 plus years of work ahead of them. And maybe it's done well, and now they're typically trying to get out of that and actually put themselves in a position to receive a guarantee. I haven't seen many cases where, like you said, for our clientele, a variable annuity fits the mold of what we're positioning.
Yeah, absolutely. And then again, variable annuities too. That I don't know if you've seen I'm sure you have actually. Seen like the prospectus that they come with, and they're literally hundreds of pages sometimes,
Yeah.
and that's just crazy to me.
Is, you liken it to, I don't know if anybody's familiar, but you maybe liken it to a contract to buy a home, right? So typically, you buy an existing home that's out there, that contract might be 10 pages.
Yeah.
What's interesting is if you start to look at some of these new construction homes, those contracts are like 80 pages long. Well, these builders are trying to cover themselves in every which way. So that contract is that much longer to protect them. So you start to wonder as you look at these contracts being the length of what they are, is there more merit to them, or does it create more questions?
Yeah, that's exactly right. I agree with that. So we talked about multi-year guaranteed annuities. We talked about variable annuities. And I think the third type we should discuss would be the single premium immediate annuity, which is the oldest form of income annuity. They're also known as immediate income annuities, but they're very old school, if you will. Not that that's a bad thing, but they have their place. Sometimes we find that, putting a single premium immediate annuity in the plan is more advantageous based on the goals. The easiest way to understand an immediate annuity or immediate income annuity is think of it like creating a private pension. You're taking a lump sum of money and putting it into a contract with an insurance company. And inside that contract, the insurance company guarantees that in exchange for that lump sum of money, they will guarantee an income stream. And that income stream term can be customizable. That would be one of the advantages of a single premium immediate annuity, is that you can have a guarantee of income, but it doesn't have to just be lifetime. It can be for a period of time only. And I think that's really where it's unique, is that it can be customized to pay out for an agreed amount of time. Sometimes we'll use those products to leverage earlier payout from those, but only do it for a small window of time to allow the other income annuity to defer and grow and leverage the guarantees of the roll-up rates in that other income annuity. Single premium immediate annuities, one of the disadvantages of it would be that you're relinquishing control of your principal. A lot of people that we work with, when they find that out, they're not too excited that they're giving up control over that lump sum of money. That would be, in my opinion, a disadvantage, but it still has its place if you can really understand that you're using that annuity as a tool, and that money that you've saved over retirement or for retirement up to retirement. A lot of people don't really understand why they saved all this money. I ask that question sometimes in our client meetings, and I ask them, what did you save all this money for? And you'll hear everything under the sun. Oh, well, to go on vacation to Italy and to buy an RV and travel the world and, buy a boat. But you never hear the main reason, like the true reason. The true reason that you save for retirement is for income. Because most people don't have pensions, and Social Security is not enough. And so you have this lump sum of money that the intended purpose for it and why you saved it over this time is to generate income, create income from it. And so single premium immediate annuity can do just that. But again, you're giving up control of your principal in exchange for that income stream. Oftentimes we'll find single premium immediate annuities are also advantageous for more elderly clientele. So people that I would say 70 years young or older. You can sometimes find that a single premium immediate annuity will offer a higher payout rate than other income annuity types. And that's simple. It's all because of the way that product is designed. It's built around mortality and life expectancy. And so when you look at a single premium immediate annuity, they're basically pooling a bunch of people into a general pool, and they know through actuarial science how many people will live to a certain age, and they know 50% of the people will live less than that estimated age and 50% will live beyond that age. And so they build the product and the payout rates associated with it based on mortality tables. And so the older you get and the closer you get to that life expectancy age, whether you're male or female, the higher that payout rate will be based on your age. Did I miss anything there, Zach?
No, I mean, it's funny because I think sometimes when we start looking into options financially, we start to get a little bit lost in all the options that are out there. And then we really lose sight of what the purpose is behind it. But really understanding what this tool can be used for, it's super simple, just that it's in the name. Single premium, immediate annuity. And then its direct relative is a deferred annuity. So functionality, the same, other than the fact that one starts immediately or within the first year.
Yeah, so 12 months or less, right?
Yep, 12 months or less. And then the other, the deferred annuity, does the same job, just starts at a later time. And yeah, you really hit it on the head, is that it serves its purpose and it does it well. But again, what comes with any annuity is a guarantee. And absolutely. Guarantee to it.
Yeah, and I think that's really where it comes down to understanding how it works, how that product works. And then also being able to compare, well, knowing that you're giving up control of your principal in exchange for that income, can an argument be made that it's paying you that much more income than another income annuity type that you may not have to give up control? Can we make an argument that it's giving you so much more income, maybe it's worth giving up control, or maybe it's not? But I think that's where it comes, like, working with a true professional that's truly independent, has access to the entire independent annuity marketplace, has the softwares and tools to filter all of these products into one place and one platform that's easy to understand, and then help you and hold your hand, take you alongside with them as they explore this world of annuities, and then do the comparison analysis. It's simple. It's, can annuity A offer you more income benefit than annuity B, C, D, and E? And if you're not working with somebody that is doing that with you, run. Because there's somebody out there that can do that. We can do that. If you're interested in us doing that with you, it's very simple. It starts with a free annuity report. That's our offer, is to help you understand that we can help you and help you help yourself. And to do that, you just go to our website at annuityassociation.com. And right there on the main page, the first thing you're going to see is request your free annuity report. Answer the questions, fill out the form, and we'll send it to you within 24 hours. It's a very transparent, easy way to get started with identifying not just the type of annuity, but which specific one of the hundreds out there in each type is right for you. And that's really critical.
Yeah, and you really hit it there. And just that, not only do we filter that for anybody who wants that transparency and understanding it, but we also show it to you. I mean, there's got to be value behind doing the job itself, but also if we can show you, hey, take a look at it yourself.
It's funny that you say that, because I worked with a guy the other day, found us online, and where did he live? He lived up in where was this guy? New Jersey, I think. And he's a very smart guy. He's actually what's called a musical therapist. I've never heard of that, but he's a musical therapist. And what he does is he uses music to help people with trauma, like past trauma.
Really?
And how they can cope with their trauma using music. And it's not necessarily just playing, instruments. It's just listening to different types of music and listening to the different types of music, different periods of time throughout the day. I thought it was very interesting. But him and his wife are both musical therapists, and they're also college professors that teach music. up in New Jersey. And he came to me and he said, hey, I'm about to retire. I've got 5 years left. And, because he works for a college, they have like people that they authorize to like help their professors with retirement planning. And the person that they met with was just trying to pitch them one product from a carrier that I'm not too fond of. I won't drop the name here, but it's a carrier that I don't prefer to work with unless they can offer a very competitive deal for our clients. But they're just a pain in the butt to work with sometimes. You probably know who they are, but I asked him that. I said, hey, how did you get on this product specifically? Like, he goes, well, that's just the one product that the advisor showed me. And I said, so they didn't have like at least a handful of products they could show you side by side comparisons? And he said, no. And I said, well, do you remember, the numbers that they were quoting you? And he said, well, I wrote them down. I said, well, they usually will provide you with like an illustration or some type of report that shows like for X amount of dollars going into the annuity, you're going to get X amount of dollars in income. And we call it an illustration or a report sometimes. And he said, well, now, yeah, he had an illustration and that's what he was showing me, but he told me that I wasn't allowed to take it with me. And I said, what? I was like, I don't understand that. And he's like, I don't either. I don't really understand it. And I said, well, that's odd. I said, by law, he's supposed to provide that to you before you guys could ever move to an application.
Right.
And, but it talks to your point there that, people should be showing you what they say they're going to give you. Right. And we do that. We believe in transparency and we believe in trust. And the only way for us to earn trust is by being as transparent as we can be. We take this very serious. We take this no different than if we were buying the annuity ourselves or positioning it to our loved one or our parents, right, or grandparents. As a matter of fact, Zach, your mother just bought an annuity, last year?
Last year, yeah. Yep. It took her through this whole process. Yeah.
Yeah. So we treat it very, very serious.